Usually, companies require that all uses of cash be made with an authorised transfer or cheque. This internal control activity allows a business to better monitor its cash outflows. However, there are some circumstances when only a small amount of cash is needed, and the process of writing a cheque is unnecessary. This is when a petty cash fund is required. So what is a petty cash fund? It is an amount of cash kept on hand in a company to pay for minor expenditures. Let's have a look at an example. Imagine you work in an office. You need to replace pens and also post a parcel on behalf of the company. Your company isn't big enough to have company credit cards, but you know that you should keep your personal and business expenses separate. In this case, you would simply take money from the petty cash fund to pay for the pens and the postage. The process of a petty cash fund always involves the same three activities. Activity number 1. Establishing the fund. This is done by writing a cheque for the amount of the fund, cashing the cheque, and placing the cash under the care of an employee designated as the custodian. Let's say that your office wants to establish a $100 fund. A journal entry will be made where the petty cash account is debited for $100 and the cash account is credited for $100. As you can see, the assets do not change. Activity number 2. Making payments from the fund. Now the cash can be used to pay for small business expenditures, such as the pens and postage. Payments can be made by taking cash directly from the fund, or employees can seek reimbursement from the fund for payments they have personally made. In both cases, the custodian needs to collect receipts for the use of any cash. Activity number 3. Replenishing the fund. As the cash decreases, the fund must be replenished. To do this, the remaining cash in the fund is counted and the business cashes a cheque for the amount needed to bring the fund back to the original balance. Let's say that you spent $15 on the postage and $8 on the pens. The fund would need to be replenished by $23. A journal entry is required here to debit the expenses made with the cash and to credit the cash needed to replenish the fund. But what happens if there is a difference between the cash needed for replenishment and the amount of receipts? What if the cash remaining in the fund is $70 instead of $77? Maybe the custodian gave the incorrect change or made an error. In this case, the difference is charged to an account called cash over and short, which can have either a debit or credit balance. In this case, the cash is short $7. Therefore, the petty cash fund would need to be replenished by $30 instead of $23. Now the business has replenished the petty cash fund.